This is Scott Becker with the Becker Private Equity and Business Podcast. I'm thrilled today to be joined by Rick Kess. Rick is a partner at RSM and follows very closely the private equity market and the world of private equity. Rick, let me tee you up. Tell us, what are the trends you're watching currently? What are you most focused on currently now?
Yeah, Scott, I mean, when we look at the private equity world, obviously we look at things like overall economic indicators like jobs, inflation, interest rates, things of that nature. Last week, I think we saw some news that perhaps, the Commerce Department was coming out with some projections that GDP might fall short of kind of their original expectations, not by a huge margin, but by a couple of basis points, as well as overall consumer spending, and some of that driven through just overall acquisitions of durable goods and things of that nature. So, I would say that could be both good or bad news. It depends on how you look at it. I think the Fed was looking for some indications that the economy was maybe cooling a bit before they made some interest rate changes. But on the other hand, consumer spending, fuels a lot of the economy of the U.S. So a lot of our clients that are in the private equity industry, a lot of their portfolio companies are, kind of tied into overall consumer spending. So, depending on how you may view it, it could be good from an interest rate perspective. It could be bad from an overall, just an overall growth projection perspective if you're highly dependent on consumer spending. But it's kind of the tale of two cities, if you will, on a lot of things for economic indicators. But that's kind of one of the things that we've been tracking most recently is really just consumer spending and the activity that it kind of creates in the economy.
No, they say that consumers have largely blown through their pandemic era savings. That's one point on that. We've also got GDP growth down to 1.3% or so. At the same time, we've got inflation. So you're right. I mean, it's a little bit of a tale of multiple cities. You've got sort of almost like stagflation. The economy not really growing, deficit spending 6 to 8%, inflation still at 3 to 4%. It's sort of an ugly, volatile mix. And it puts Chairman Powell in a spot where it's hard to lower rates with inflation still at 3 or 4%. But at the same time, growth gets negative, employment goes down, and unemployment goes up, and employment goes down. He's going to have no choice but to lower rates a little bit, which might fuel more inflation. So it's really a challenging time, isn't it?
Yeah, I guess for me, I think it's I'm glad I'm not in his shoes. I mean, like you said, he's got a lot to weigh. They've got a lot to kind of consider as they kind of consider the future of the economy, at least for the next 6 to 12 months. And I think you've got a lot of things that they have to keep in mind depending on what lever they believe that they can have the most influence on without impacting everything else. Hopefully it's not so to speak a house of cards where they move one card over a little bit and the whole thing falls apart, which given the strength of the US economy, it's hard to believe that something like that would occur. But I think that's obviously on the minds of people that make these decisions. And I guess I'm happy I'm in my spot where I can kind of second guess them and kind of project what they're going to do versus actually have to make the call that may impact different parts of the economy in different ways that somehow we didn't really expect on the onset.
No, it really is a challenging situation trying to deal with all these things, and also with sort of Chairman Powell shows tremendous steadfastness as he gets pressure from the Republicans and the Democrats to try and deal with interest rates. And it's really a fascinating, challenging time because if interest rates stay too high for too long to fight inflation, then we're going to have several people rolling debt over that's going to be at higher and higher rates, and that's going to put more and more pressure on both the bolt-on deal world as well as just the general commercial real estate world. And then let's hope that the consumers stay solid enough because it's a big part of spending in the U.S. and drives the growth. But right now, those first quarter stats, slower growth, inflation's still sticky, quite concerning, and leaves Powell in a very, like you say, better to have our jobs than his jobs right now because that's a challenging spot, isn't it?
Oh yeah, for sure. And I think the interest rate rollover question, I think, is a real question for both businesses that, took 5-year interest rate locks, early in the 2020 period. They're kind of coming up close to that period where, we're going to start to see some of these companies having to make some hard decisions on how they're going to refinance the debt that they have, hopefully be able to find opportunities of that don't put them in a position that, their interest rate is too hard for them to carry in terms of just an overall debt service coverage perspective. So, I do think we'll kind of have to evaluate this as the next year or so turns. If interest rates stay the way they are, it may put some companies in some pretty big predicaments. Not to mention, unfortunately, the consumers, as you mentioned, some of those consumers also, refinanced into, adjustable rate mortgages, even though, we know all the risks that lie with those. Some of those things were kind of prevalent, maybe not on their first, but maybe on a second mortgage or HELOC or something like that. So I think we will see some rate readjusting over the next year or so, just based on the calendar of where we're at in terms of where we've been since 2020 and where we're kind of falling in the 2025 range pretty quickly here. So, it is kind of an uncertain time in that respect.
I have a question for you, Rick. You talk about consumer spending softening, and I guess my big question is, how do I get consumer spending to soften in my own household? That seems to be the biggest challenge I'm facing right now.
I'm right there with you, Scott. I just looked at our Amazon account before I got on this call, and I about fell off my chair. So I can tell you the Kest household, and it sounds like the Becker household are definitely keeping Amazon and others afloat, I think, right?
I mean, every time those Amazon packages arrive, it does feel like some consumer in the household has a small heart attack, don't they?
It is very true. Yes, yes, indeed.
Rick, thank you for joining us today on the Becker Private Equity Business Podcast. A bunch of fascinating stats that make Chairman Powell's job hard and makes it harder to read when acquisitions will pick up in earnest in a hardcore way because people are so scared of the debt costs and so forth. Thank you for joining us on the Becker Private Equity Business Podcast.
Of course, pleasure to be here. Thanks, Scott.